Now, my dear friends, we are going for another interesting area. We have already done a consolidated question. Now we are going to do MQP June 25, which is also similar to our class workbook question, which comes on advanced concept. This is little bit of final level concept, but still it is there in MQP. I don't want to miss this. So this MQP we are going to solve for you in this session. So my dear friends, what is this MQP is all about? This MQP is giving reconciliation concept, further concept also they are asking. So we are going to do the reconciliation concept also. How to do reconciliation in standard costing also you are going to learn. So let's start. ABC Limited adopt a standard costing system. Standard output for a period is 20,000. Standard data and profit is given. So this is the data for a standard. This is the data for a standard. The actual production and sale for a period is what? 14,400 unit. Actual production is what? 14,400. There has been no price revision by the government. So they are given the material. Price adverse is there. Usage favorable. What is mean by adverse? Adverse means price is increased. That is what you planned a standard, in that price is increased. What is in by favorable? It's good. Your cost is reduced. So adverse means cost is increased. Favorable means cost is reduced. That is the one point you have to do. Same way labor also, this is right and efficiency, cost increased, cost reduced. Fact overhead variable also we have fixed, admin also there. You are required to ascertain actual cost. What is the actual cost? They're given standard. So very easy. From the standard cost, add all the favorable, add all the adverse, less favorable, you will get the actual cost. And profit and loss statement also they are asking. So we'll do proper working. We'll do proper working. So show the working clearly. We can do shortcut method. What is shortcut method? Find out the total standard cost, add all the adverse less favorable, we can do shortcut, but they ask you to prepare properly. So we are going to do proper for you. Shall we start, friends? So we are going to do a small statement called a, very easily we can able to do. So statement showing computation of actual cost and profit and loss. So first we will start with material. See, what is the standard material cost? Standard material, you have to take your actual, because we know SH standard is what? Standard quantity for actual production. So everything you have to take actual production. Don't take this 20,000, your actual only you have to do. So 14,400 into what is the material cost for 1 unit? It is 4.5. 1 unit it is 4.5. Correct? 1 unit it is 4.5. So what will come? 14,400 into 4.5, 40,000. Now you have to go for all the material variants. The price is adverse. So add price variance, because why we have to add? Because cost is increased, actually is increased. So you have to add less usage, because cost is less usage variance. So add 4250 less 1050. So what will happen? This is your actual 68,000. Next, we can go for your standard labor. What is your standard labor? Again, the same step. So you can able to go for it. 3 rupee. So 14,400 into 3. 14,400 into 3. What is the point? Add rate variance less efficiency variance. So what is the add rate? 4,000 less efficiency. Hope you understand the logic behind the add and less. You got 44,000. What is the next item? Next is some direct expenses. See, direct expenses, there is no variances. See, There is no variances. So you can take as it is the amount 14,400 into 0.5. If you want, you can take this also name called a prime cost, material plus labor plus overhead. You can take this as a prime cost. Now you can go for what? Add factory overhead. Factory overhead, we have variable also. So add, or we don't want to go that way. Standard variable overhead. Standard variable factory overhead. Standard variable factory overhead. What will come? 14,400 into, for each unit what will come? 0.25. Correct? 0.25. So what will come? 3,600. What is the adverse? It is favorable. So favorable, what you have to do, friends? Favorable, we have to add or less? Less. So you have to less. We have favorable 400. Only one item. Next, we have standard fixed factory overhead. What is that? 0.3. You get this. Now add unfavorable. What is unfavorable? Unfavorable, we have volume variance. Add volume variance. Less, we have expenditure variance. So what is the volume variance? Bigger amount, 1680. What is the expenditure variance? 400. How interesting, friends. Next we have picture also admin overhead. Standard admin overhead 14,400 into 0.3. 14,400 into 0.3. Again, you have to check the data. What is the data, friends? Only expenditure volume, both are unfavorable. So you have to add adverse. Both you have to add. So 400, I will do shortcut method this 1680. So this is what your total cost. This is your actual cost. So what is the sales amount? Sales amount they mentioned already in the question. 10 rupee. Sales is what? 10 rupee. So 14,400 into 10 rupee. One second. You can get your profit. So selling price is 10 rupee. Maybe printing mistake can also happen. So come on, friends. You can able to copy it very fast. Yes. So actually, that is not the selling price. We have taken the total double effect. We have to take from the prime cost. So you have to take your total cost. This is the data. We have taken double material labor again. We have so Your actual cost will be this amount. So actual cost is a sum total of what? Prime cost total already we taken. So point number 4 plus all other total. You have to add from prime cost, then fixed overhead, admin overhead. So you got the profit. Hope all of you are clear. Now, my dear friends, we are going to do reconciliation. Generally, reconciliation will come for final level, but in intermediate, we are going to solve this for you, my dear friends, in this MQP also. So, how to do reconciliation? So, they are asking this question very clearly that reconcile actual profit with a standard profit. So, reconciliation of actual profit with standard profit. My dear friends, one of the easiest method only reconciliation statement under standard costing. So you can listen very well. One of the easiest method only reconciliation statement of actual profit with the standard profit. So you can start with it. Generally, we can start with standard profit. We can start with what? Standard profit. 14,400 unit we have. And what is the standard profit we have? Are they given profit? Yes, 1.15. So 14,400 into 1.15. Your standard profit will be 15,500. Now you have to get. I am telling you, shortcut method, my dear friends, for getting this actual. This can be a very good point. SA model question. See what you have to do now. You have to get actual profit. Your actual profit will increase if it is favorable because your cost will reduce. So add all the favorable variances. You have to add all the favorable variance and you have to less all the unfavorable variance. That's it. You have to add all the favorable variance and you have to less all the unfavorable variance. That one line. So if you add all the favorable variance, if you add all the favorable variance, what are all the variance you can add? See, favorable is this column. So material usage variance. Material usage variance. What is next? Labor efficiency variance. Labor efficiency variance. What is next? Variable expenditure variance. Next is what? Fixed expenditure variance. Anything else? No. So you have to enter all the amount. Material usage is 1050. What is the efficiency? 3200. Variable expenditure variance, both are 400. So you have to take all total. Now you have to reduce all the unfavorable variances. What are all the unfavorable variance? Price variance, material price variance, labor rate variance, then these are all favorable. Fixed volume variance, then we have admin variance. I am taking both together so we can save time. Admin variance. The reason is what? Both are adverse. So 400 plus 1060. Exam purpose, you have to show separate. Fixed volume 168. Labor rate 4000. Material price 4250. My dear friends, if you done properly, it will be tallied. Just like your profit reconciliation statement of your group one, or BRS of your foundation, it will be tallied. This will be the actual profit. Actual profit 1 plus 2 minus 3. See, we know what is actual profit. What is actual profit? We have 9,600. We should get that. We are checking, are we getting the same? We should get that. Then it is answer is correct. My dear friend, you are getting the correct answer. That means your working is correct. My dear friends, you are getting a correct answer. That means your working is correct. Hope all of you are clear. So a very good question, a superb area. This you can able to solve accordingly. Clear friends? So please take your own time and complete friends. So a superb area, you can able to crack this question very easily.